In this video, we're going to be discussing the use of the Gann fan, or as is referred to in TradeStation under Drawing, go to Fibonacci Tools, go to Speed Resistance Fan, and the tool will pop up. Or you can create a hotkey, which is the way we use it here. Now, in order to generate a fan, you need 2 points of reference. And depending on what you're looking for, those points of reference will vary. For example, in a falling market, you could be looking for higher lows, or you could be looking for lower lows. In a rising market, you could be looking for higher highs or higher lows. So depending on what you're looking for, you're going to set this up differently. Let's use a falling market looking for lower highs. In this case, what you'll do is choose a starting point, a higher high, and a subsequent point, a lower high. So here our higher high was at 28.92.25. Our lower high was at 28.59.50. And you go into the tool, go into data, and plug in the numbers right here. 28.92.25 and 28.59.50. Okay. Now, as you notice, with this particular setup of the fan using various Fibonacci numbers, as the market drops into the following day, we catch these highs. The next day, this high. The following day, just a little bit above. Well, the beginning of the day is right down in here, and then a little bit above here. Following day over here. We completely missed this, but that's okay. We're looking for lower highs. We catch this in here, and then we pretty well have fallen off by that point. That's several days worth of trading just using two numbers. Okay, so in a falling market, lower highs, we simply pick 2 points, one higher high and one lower high. Now let's look at a falling market looking for lower lows. To do that, we're going to use a high point and a low pivot. So for example, here's our high, here's our low at 28.32.25. We catch this initial low, that low, this low, that low on the following day. We completely miss this. We'll come back to that in a minute. But then we catch these low in here, this low, and we break through on this particular point. But pretty well catch it. We can reconfigure this to catch these points with more accuracy using more recent numbers. This particular low was virtually impossible to work with using a Gann approach. This is more based on market profile, but you get the idea. Once again, falling market, lower highs, you pick a high point and a lower high. If you want to get the lows, you pick a high point and a low point. Now, in a rising market, it's going to be just the opposite. If we're looking for higher lows in a rising market. We pick 2 points, a lower low, and then a higher low. Here, and here. And on the following day, we picked off this, as well as that on the same day. And the following morning, pretty close to this low. And then we broke through the trend, and we need to start over. So that's the idea. Rising market, higher lows. Pick a starting point and a higher low, a lower low and a higher low, and you'll get that. Now what about higher highs? Well, just the opposite. You pick a starting point, a lower low, and then a higher high. Okay, here for the following day, and then we of course see the market plummet again. So the whole point here is just to know how to set it up. So let's review. In a falling market, if you're looking for lower highs, you pick a higher high and a lower high. If you're looking for the lower lows, you pick a high point and a low point. A higher high and a lower low to get the projection on the lower lows in a falling market. Rising market, lower higher lows. Pick the low and a higher low. If you want the highs, you pick the low and the high. That's really the approach that we take. Now that we have a basic understanding of the approach using the Gann fan, the question is, can we use it on premium? And the answer is yes. So let's take a look at a falling market where we're looking for lower lows. In this instance, what do we do? We pick a high point and a subsequent low point. And we can even do this from the previous day. So here at this particular high, just get rid of the hand here. We pick the pivot point using the threshold indicator, which already registers where the premium was at this high, 594. Corresponds with this high pivot and a subsequent low pivot right here at 486. So create the box, insert our numbers. 594, 466 responds to this. And now how do we use it? If we're looking for the low, or at least the initial low, we need to see divergence. So as the fan begins to form, you'll notice that this particular low, okay, we're catching all of these lows here, and we're getting lower lows on the premium as well. But as we come to this point, you see how the premium is becoming divergent. In other words, we've got lower lows, but we have higher lows on the premium. Not here, but in here. See how we've moved above the 50% line, higher lows. Something's about to change here. And on the next bar, We're at 469, and there's our pivot. And the market starts to move up again. Now, once this has occurred, once the pivot takes place, we probably need to reset our starting point and our ending point. But just for grins, notice what we continue to see happening. Even though we've used this point from the previous day, and this first low before the first major pivot. I wouldn't call it major, but it is a pivot nonetheless. At a lower low, we're still able to catch this low right in here, 441, and that's a higher low as it turns out. But if we move this further down, you'll notice that we're not really getting anything in here. We're not dropping low enough to catch this, and that's not going to happen. We're just way too low. So that's why we need to reset. So let's use another point of reference. We'll cancel this out. Remove that, and we'll start again at a high and a low. Now we have a high here, we have a low here, and we're looking for lower lows. But we've got higher highs over here, and that's really we don't want to pick this and this, because this is a from the standpoint of the pivot. Yes, it's a higher high. And this is a lower high. Pardon me, higher low compared to this. But we don't know what the direction of the market is at this point. We're still going up or going down. So if we pick this point, we would be anticipating lower lows. Now let's just see if that works. I'm using a hotkey to create my retracements. Okay. And we've got a very steep slope in here, insufficient for us to really get any results. So let's pick a different point. Here, and in here, catching this, we caught that. And as you can see, we're catching these bottoms, but we've missed this. We're way over here. Perhaps we need to reset. But we caught some of this. What about if we had this point over here to this low? Right. We catch some of these lows, but not really the lower lows. What if we pick this point, and this point, and this point? Okay. These two points. The Gann fan on the Spoos works pretty well. But we're looking at putting this on the premium. So if we used these original points here and here, you see, we don't really get much. We're not getting any lower lows here because our slope is too severe. So let's use this level here. and this low here, and this low here. Now we have a much better situation here and here and here. 543, 436, 436. We've got this pivot, this low, and this low, and this low. Amazing. Now, the important thing about the way in which we interpret this data is to understand that the pivot is what is coming as a result of divergence. So this isn't necessarily a trade signal. There needs to be divergence. Okay. So what I'm going to do just so that we can see this just a little bit better. It's a little busy at the moment. Let's just get rid of some of the data in here. We're just going to reset. So that we move some of our lines out of the way. Okay. So when we come into a low, and then the premium bar at the time of the low is a divergent bar. By now you should know what that means. Here as we came down to this low, right? Corresponding here. Just line this up for you. Right there. We hit that low. The next set of bars is above our 61.8% level. There's divergence in here. That results in a little bit of a move up. But after this big drop, by now you should also know what that means. Even though this made it almost exactly to the 38% line. This was a lower low on the premium. So even though we did get a pivot, you knew that we were coming back. This is not the low. We need to short whatever happens subsequent, because we're coming back down. Nevertheless, on the next set of bars, we were divergent. We were above this line, and the market began to go back up. But that was a signal that this was going to be retested, which eventually it takes a while, but eventually it happens. Way over here. Okay, just to verify that. Okay. That's where we were. Eventually we broke through. Now, we did get a move up. However, and the trend did begin to change at least temporarily. So how could we have found the highs? We take a low, we take a high, and we take a high. Right. So let's turn the threshold indicator back on, and let's reset these numbers. This just gives us some pivot point references. So we'll take this low. And we'll take this high at 568. Okay, to be exact, 385 and 5 and 68. And as you can see, these numbers have not really produced a very effective fan, because we're getting divergent way over here before we finally become divergent at the top. So this and this haven't worked. However, there is another Fibonacci number at 76.4. And now, when we include that into the equation, we see the divergence happening right in here, right at the top. So we've got to give it a little bit of time before the divergence takes place. You saw that happen. It happened in here. It happened in here. Okay. We're at a higher high. It happened again in here at a higher high. And then it happened again. And then it happened again at a higher high. So there was a little area in here where there was some potential concern for where the divergence was actually going to take place. For that reason, of course, recommend the use of moving average, to really identify precisely where that take place. But you get an idea of where it's going to be. Now let's take it a little further. We've got this low. We started first of all with this low here and this high. Now let's go low from this to this high. See if we can predict this high over here. So we picked this low. On the premium. This high on the premium. We're quickly divergent in here, as you can see. We're looking for higher. But we're looking for higher highs. Okay. So we follow the next line. Now we're getting higher highs, and now we're getting higher highs. We're not getting we get divergent. But we're still above. But we're still above this level at 76. And then right in here. See how we're below? We're below that level at 551. And there's your high. Nice. So we reset again from here to here. To see if we can pick our next highs. And what do we see? We've got too big of a spread here. So we'll look at our 61.8 line. And right in here, we're barely making it to the top, and then we're dropping off below it, We're divergent. Okay, divergent. At the top here we come, and down retests it here. That retests it here. The very next set of bars, and down we go. Are below, and down we go. Now we climb back up again. And we're still this point. We still have some. Level of accuracy here. Because at this particular high, look at where the premium is. On this next bar. We're even below the 89%. We're even below the 89% level. And down this, and we'll go lower. As you see. So this method of approach of
very,
approach
very
can work
well.
very, very
Just remember
well.
what it is you're looking for.
Just remember what it is you're looking
And typically when using the premium, we're looking for the highs to be divergent at the top of a move, and the lows to be divergent at the low of a move. So it would be a rare thing for there to be any need lower highs on the premium, or higher lows on the premium. But at least you know now how to do that. So typically we're going to look for the divergence on the premium at a high where we in fact have lower highs on the premium, failing to move up to Gann retracement, divergence at the lows, as we've demonstrated previously, and look for the divergence there. That's how we do it. Very, very effective.
And it's very, very effective.
Now, a couple of last things.
I
like to use a hotkey in order to toggle the threshold indicator. As we know, the threshold indicator sometimes will get a little glitch in it. A hotkey is a very effective way to reset that. And what you do in order to cause that to occur, come over here to hotkeys, go to view, go to hotkeys, and your setup is in here. For example, the drawing tools. Fibonacci fan has a hotkey of F10. You can also go to format. Enable or disable analysis techniques. I've set up so that if I need to retoggle the threshold indicator. Right now it doesn't look like there's much of a need. But if you look closely at that particular bar, it's just a dot. It shouldn't be that way. It's just a dot. It shouldn't be that way. There's a little glitch. So if I hit my F5 key, indicators, I just click on this. I disable it momentarily. Again, hit the F key again, and we see we now have a complete bar. So that's a real fast way to go ahead and do that. So go ahead and make use of the Gann fan. Make use of the Gann fan on the premium. You can also use it on the Spoos. You'll find some very effective. Entries can be achieved. By the use of this. In our final video, we're going to add on this subject another indicator that divergence indicator, which is working very, very well. And we'll talk about that in the next